Hey, what's going on, my friends? It's your man Adam Ace Spencer here with another dividend portfolio update. For those of you out there who are new to the channel, welcome aboard. Here, we started this portfolio back on February 1st, and we started this with only $100. And, we had one larger contribution, and aside from that, we've just been contributing $25 every week into this portfolio. Now, if you are someone out there who's balling on a budget, you don't have much money, you're new to investing, or you're thinking about starting to invest, well, this portfolio might be what you're looking for. Too often, people just see the easy money, and how quickly some people might accumulate some extra funds, some additional funds because of maybe a potential squeeze. But those are, that doesn't happen frequently. And if anything, I think more people tend to lose more money from those particular situations. So on the other side of the spectrum, you have a portfolio like this, a dividend portfolio where, yes, we want to see our gains go up. We want to see the stock price go up, but we also want to generate dividends that we get paid, every month or every quarter from our investments. So that is the beauty of this portfolio and the fact that we are dollar cost averaging. So even though the stock market is not the best right now, we continue to invest into this portfolio. So without further ado, let's just look and see how things have been going. For one, over the past day, you can see it's down. Our portfolio is down 0.18%. The past week, we're down 0.44%. The past month, we're down 3.15%. In the past quarter, we are down 3.94%. But 1 year, we're up 3.65%. And all time, our portfolio is now up 4.19%, which gives us a total current value of $2,027.96. Of that money, you can see our market gain is actually down $6.62. So the reason our portfolio is still, we still got some extra money, we still got some gains in here, and we're not in the red, is really because of our dividends, in which you can see our dividends have earned us $58.64. So it's funny how I don't hear all of those dividend portfolio naysayers, people who there's a lot of people out there, prior to this quarter, the past 6 months, I feel like you can Google how many YouTubers would basically bash dividend stocks. I think it's Stephen Graham who had been big on dividends and then made a video saying, I'm not investing in dividends anymore. Well, I wonder how his portfolio is currently doing today. That's what I'm I should go check up on his channel, see how his stocks are doing. And a lot of those other YouTubers who would talk about, don't invest in dividends. Dividends are bad. Well, let's just say my dividend portfolio right now is currently in the green, despite the market, despite everything that might potentially go on with Russia and Ukraine. We are still in the green right now. And of course, yes, we might fall down again. And if we do, we're just going to continue to dollar cost average, contributing $25 every week into this portfolio. And of course, the beauty of this portfolio of using M1 Finance is when you do have a portfolio, or a pie, as they call them, and you add your slices, which each slice is its own different company. Well, you decide what portion of the pie you want each slice to be. And for me, I said approximately, we're just going to make it even, and I'll split all 10 of these stocks up evenly among our pie, so they each get 10%. And again, that's the beauty of this pie, because you can designate essentially, what percentage of your portfolio you would like each stock to be. And then to when you contribute your money every week, well, M1 Finance will take care of making sure they invest the money appropriately with the company that essentially is down in your portfolio. And so it's cool. I'm a big fan of utilizing this platform to help with growing my money, and I definitely recommend it to others. And, I do have a link down below, my referral link. So if you are interested in growing your money with M1 Finance, definitely click the link down below. You can get some free cash using my referral link if you start and fund your account. And I also have a link to to Webull, another one of my broker platforms that I use, in which if you use that link, then you will be able to potentially get some free stocks. If you start and fund your account there. So let's dive into our portfolio and see who is still doing well, who's not doing so well. At the top of our list, we have Coca-Cola, who is up 32.10%, followed by PepsiCo, who is up 29.20%. Procter & Gamble is up 26.98%, followed by Newt, our first REIT in here, is up 26.55%. Then we have Realty Income Corp up 10.27%, followed by Johnson & Johnson up 4.33%. And then Verizon Communications up 2.20%, and JP Morgan Chase & Co. up 1.82%. Now, unfortunately, we do have some red in the mix, where you can see Innovative Industrial Properties is down 26.37%, and 3M is down 28.34%. And when we see where is our earned dividends coming from, who has paid us the most, well, we have Newt at the top of our list, which is up here at $15.28. Clearly, just killing it compared to everyone else on our list. Verizon is next at $6.54. And this kind of helps make up for them being fairly low on our list in terms of the stock gains. Then we have Realty Income here at $5.57, 3M at $5.27, and so on and so on. Our newest company that we added to our portfolio was Innovative Industrial Properties, so they are down here at the bottom of the list at about $1.13. So as a whole, things are continuing to move in the right direction, up. Yes, things might sometimes take a little bit of a dip, right? They might go down a bit at times. Let's go to 1 quarter and see how it looks. Here we go. Good, nice example. The market is not always going to go up. It needs to correct itself at times, and there will be events that arise and drive the market down even more sometimes. And I think right now we're at a period where, it was my stock with this particular portfolio. There's been a few times where it started to take some little dips, and then it would just, rise back to where it was, and steadily start to incline from there. Right here, it kind of looks like we're seeing a little bit of a plateau, especially with this latest news with what's going on with Putin and whatnot in Russia. So things are, but still, you can even still see a nice little incline here. So this is what I mean and speak why I speak about the importance of dollar cost averaging, of just continuing to invest a small amount on a consistent period of time. Because if you would have just thrown all of your money in here at once, instead of us still having money that we can allocate towards this portfolio every week, well, we would be down potentially much, much more, depending on when exactly we bought in. So by taking the approach that we're taking, which is just paying, or should I say contributing, a small amount of money on a consistent basis, well, we're able to just kind of ride the waves of the market when things go up as well as when things go down, instead of just kind of taking the other approach with a hit or miss. Taking that large sum investment approach it can work really well, but at the same time it could come back and nick you in the butt. So doing this approach is working well, right? We're up right now in a bad market, and this also allows us to invest with little to no, with little money. I don't want to say no money. You can't, but you need to have some money. But really, if you just start to invest on a consistent basis, and, using something like M1 Finance allows you to set it up automatically. I don't do anything at this point, pretty much. I'll come in here and, of course, check up on our companies, make sure things are going well, see if there's anyone we potentially want to remove from our list, which there isn't. Aside from that, I don't do anything. The money is automatically pulled from my checking account, savings account, and yeah, I'm able to invest and grow my money just by me making sure I work and I have money that's automatically invested or added to my savings and checking account, in which this just pulls it out on its own and invests in the appropriate stock depending on the actual target and the target the actual price of the stocks and whatnot and where they stand. So I love it. It's just set it up on autopilot, and we're growing our money. We're getting our hard-earned money to grow for us, to work for us, and that's what it's all about. Now, really quickly, I want to throw out there, if you are new, you might have noticed this jump here. This was when we got our stimulus check, and instead of just balling out and splurging, we invested $500. We put some of that stimulus check towards bills. We maybe you decided to treat yourself to a nice dinner, or treat yourself to some kicks, some custom Jordans or something, some Nikes. You dropped a couple hundred, and then we said, hey, let's invest some money in our future. And so I decided to put $500 in here. And this really is just a nice example of, if you do get extra money, you get a bonus, you come across, you start a new side hustle and you start to accumulate more money. And yes, I said side hustle because, this channel, we talk about managing, growing money. And one of the best ways I talk about making money is through TaskRabbit, a gig app. And so many people think about it as just a side hustle. So if you want to try to make some extra money, sign up with TaskRabbit. Check out some of my other videos. And when you start to get that extra money, add it to your portfolio. And you can see this nice, beautiful jump here. And it's just going to help streamline, it's going to help speed up the process of growing your money. The more, especially in a dividend portfolio, the more money that you have working for you, the quicker and the more likely you are to accumulate larger returns, larger gains, because that money's working, in which we will get our earned dividends, which again, depending on the company, or if it's a REIT, if it's a regular stock or whatnot, we might get those dividends every month or every quarter. But ultimately, it's all going to be redeposited in this portfolio, and it's all going to work for us again. That's the point. We're not taking this money out, and even with the current market, it's fine. It's cool. We're not stressing, because I'm looking at it as, hey, these are great opportunities to buy companies that are at discounts, that have been hit and are cheap and on sale. And I believe they'll be here in 5-10 years from now. So I'm going to continue to invest in them. And ultimately, that's what it's all about. You can't panic sell and freak out and just stop investing. We know inflation is killing money that's sitting in a savings account. So you don't want your money just to sit there. You want to get it to work for you. And one way to do that is with a dividend portfolio. So I hope you guys found this video helpful, motivational, encouraging. If so, definitely smash that like button. Feel free to leave a comment down below with your thoughts on how the market is going. Do you have a dividend portfolio, or a portfolio that at least has some dividend companies in there? And if so, how is your portfolio doing? Like I said, we've been up almost twice as high as this at times, and we've been down even lower. So I'm satisfied with where we currently are with this portfolio. But I'm interested to hear what you guys think. Feel free to leave a comment down below. And while you're down there, don't forget to smash that like button. And of course, subscribe to the channel. Hit that notification bell so you guys can stay up to date on all of our latest and upcoming video content. But all right, my friends, you already know what it is. I gotta keep it moving, but I'll see you in the next video. Peace.